Hello, hello, beautiful people. Today I'm here with John Roberts. First, I should mention my name is Samson Williams. I'm president of the Crowdfunding Professional Association. And today I'm here with John Roberts to talk a little bit about his investor journey and why he's interested in crowdfunding. And so I like to just jump right into these, John. That way we don't have to script anything. So
Sure.
tell us about yourself and what got you interested in crowdfunding.
Well, probably the pandemic, actually, because I found myself at home and I knew a little bit about regulation crowdfunding, but I hadn't dipped my toes into it or anything. And, a year or 14 months ago, I found myself with a lot of time on my hands. So I started doing some research and really got involved to where I was doing it pretty much on a daily basis, researching and looking into various options.
I love it. I love it. And just as a disclaimer, this is only for informational and educational purposes. As always, investing is a great way to lose all of your money. So please do your own research. I always have to remember those good disclaimers. But last year in 2020, for the whole RegCF industry, it raised $214 million, which was a 105% increase from 2019. Right now, here in 2021, depending on when you're watching this, we're a little over the 400 million mark raised in the RegCF market. We're probably going to tap out around 650 or 800 million. There's a variance there because fall from September to November, that's what I call crowdfunding season. That's where we see the majority of investments made, courtesy of Woody Neese over there. He generates these great crowdfunding reports. So I just wanted to throw that out there as just a tidbit. So, John, as you were doing you're in the pandemic, you're stuck at home, you're looking at deals, you're looking at crowdfunding deals. What drew your attention to them first?
Well, I mean, first of all, I love the term you use, investomers. And, it is such a great opportunity for startups to, or even established businesses to engage their customers to become also investors. And so I love that idea. And not of someone not only being a customer, but also running around saying, you should use this company because I'm an investor in it. So that really attracted me to it. And then I'm involved with a company called Moxie, who recently completed a funding round, and it was the I guess review of all of the different offerings and how many companies were just out of the box or were just ideas, didn't have any financial results and stuff. And so I investigated more and more because I wanted to encourage the leadership of the Moxie team to also go this route. And they eventually did.
Excellent. So this is the investor note. I love it because I feel like John Roberts is an investor into Moxie. Is that true, John?
Yes, it is.
Awesome, awesome. So everyone take notes. If you're a founder, if you're a business owner, you're looking for that investor, not saying don't email John Roberts and ask him to invest in your company, but he's going to tell you, here are some of the things that he's looking for when he goes to make an investment. And so I already heard from you, you weren't looking for ideas, but you were looking for companies with some type of traction or revenue or sales. Is that correct?
Yeah, I mean, I think that's always best. There are, of course, are great ideas out there, or great companies that if you had invested before they had any revenues, you would have gotten in, at the beginning, it would have turned out great. But those companies fail far more often than they succeed, as we both know.
That is true. That is true. So can you, if you're okay, can you share with us a little bit about your journey with Moxie? I want to say, and correct me if I'm wrong, you were the lead investor into Moxie.
That's correct. So I was already involved with Moxie as an investor and participant, but the crowdfunding trip for us was finding the right platform. We ended up on WeFunder. And then it's, from my early reviews of some of the companies that were on Start Engine and Republic and Micro Ventures, Net Capital, they didn't seem to, it didn't dawn on me how much work actually went into getting the Form Cs completed and all of the financial reviews and the CPA involvement with either audits or at least, GAAP accounting principles, which I didn't learn until this process that every CPA can't do that. You have to have certain credentials. So yeah, it was quite a process for Moxie, and it was may look a little or might look fairly easy from the outside, but if you actually do it, it's something that you'll probably end up being surprised at how hard you have to work at it.
I do like to remind people there's no such thing as free money.
Right.
Um, and one thing to keep in mind, when you go to raise money via crowdfunding, whether it's from sharks or angels or the crowd, or rather when you go to raise money, be it from sharks, angels, or the crowd, all these three people, they want to know the same information because investors can't make decisions without data points. So that Form C that John was just talking about, that's a standard form that goes to the SEC 21 days before any RegCF deal goes live. Your GAAP accounting principles, they're a little nuanced. You do actually need someone who specializes in them to help get your book straight so that when you do offer your materials, investors like John look at your books with confidence. Because were there any, not necessarily in Moxie, but were there any other deals that you looked at where you had some immediate red flags, or rather, what are your immediate investor red flags?
Well, I would say, I mean, I guess I've made probably, some of these deals you can just invest $100, or I mean, I don't think I've done any $100, but $250, $400. And so, you can like the idea and the potential there, even if the valuation is not necessarily reasonable, but if you like the team, then, those are types of investments. Sometimes you'll just go ahead and pull the trigger on because you're not, don't have a great amount of risk. But, you definitely need the management team and their previous involvement in the industry that they're trying to break into would be very important to me. Also, just any traction that the company already has. Hopefully, it's not just an idea. They have done something to prove themselves within the industry they're trying to gain traction in. So those would be two of the things that are very important to me, and the valuation being reasonable.
Yes, a reasonable valuation is always important. I like to say everyone's a billionaire in Excel, but in the real world, it might not work out like that.
Correct.
So you're listening to Samson Williams here at the Crowdfunding Professional Association. I'm having a chat with John Roberts, the lead investor into Moxie. We talked a little bit about crowdfunding, a little bit about his journey so far. So John, if it's okay, I'm going to ask you some lead investor questions about Moxie since you've got on a great t-shirt, or rather a great polo. So one, if you're okay with answering, how much did you invest and what is Moxie and what made you make that decision to invest?
So I was already an investor in Moxie previously. So I have a total of $55,000 invested in the WeFunded round. I went from 50 to 55, so I invested $5,000 more. Moxie is a business-to-business trade exchange. It has about 4,500 business members, mainly in the Gulf South, primarily in Louisiana, where the members are businesses that barter their goods and services with each other using a digital community currency. So they're, the plumber and the dentist and the restaurant and the attorney don't have to do any direct trade. They offer their goods or services into the network. The plumber fixes the restaurant's pipe, the leaky pipe, and he takes his Moxie dollar credits in the network. He doesn't have to eat at the restaurant. He uses his credits to get his van tuned up and the tires rotated. And then the auto shop uses, those credits to hire an attorney to do some legal documents, and the attorney uses his credits to dine at the restaurant and entertain cash customers. So that's what Moxie does. Moxie was in need of some software upgrades, and so which are quite expensive. If you're familiar with software at all, it's hundreds of thousands of dollars that were going to be a drag on the company. And so the idea was raise some funding through this crowdfunding portal and pay for the software upgrades that way.
I love it. I love it. I've just heard so many interesting tidbits around strategy here. So John, you've got to correct me if I'm wrong. You were before Moxie did a RegCF, you were already an investor.
Correct.
I'm gonna just go on a limb and call you an angel investor into Moxie. And so And so he's nodding his head in the affirmative for those listening to this on the
Sorry.
podcast. And so here you have an accredited investor who's already invested into a business. That business needs to scale, needs to move to the next level. So he's like, yes, I'm 100% behind the business that you're already investing in, doing a RegCF, where so you invest additional funds into Moxie's RegCF for $5,000 to help lead that round. Break out your Moxie pom-poms, cheering on their digital community currency. And I love this because I hear my blockchain, my cryptocurrency, my tokens go off, but I'm going to put a pin in it and say, can you expound upon what a digital community currency is a little bit more?
Yeah, so it's barter dollars basically. So barter's been around since before money. Pre-computers, there were barter exchanges like this, and they just used slips of paper like checks between the businesses. So now we've just simply been able to go digital. So everyone has all the members have an online account, just like you'd have with Chase or Capital One. The Moxie dollars, the barter dollars, are recognized by the IRS for better or for worse. Equal to US dollars. So this is all above board, and everyone has to pay taxes on the revenue, and they get to expense their expenses just the same in their financials. But yeah, but it's a digital community currency. We're not a cryptocurrency. We're not on the blockchain, but we are similar in the fact that we are using strictly digital means of transfer. And Moxie is kind of a means of exchange. Moxie is money with an X factor. These are some of the taglines that we use.
Oh, money with an X factor. I love it. I love it. Because that X factor for me is the community focus and how you get value to circulate longer in your community. Is Moxie by any chance geofits to specific locations?
Well, we want to expand across the country. So right now, it was founded originally 20 years ago in Baton Rouge, Louisiana. It's throughout Louisiana, about 3,500 businesses in Louisiana, and about another 1,000 all the way to Birmingham and up to Memphis, and along the Mississippi Gulf Coast. So, but yeah, the most difficult part of starting any new community with Moxie is the ability to have enough members to be able to trade with each other. So you can't just have a dry cleaner and an attorney because there's not enough business to go around. So you have to establish that initial mix of 50 or so businesses within a community, and then you can launch. And so that's our only limitation, really.
Man, I love it, because when I'm thinking about the X factor of Moxie is now that you've aggregated, you've built this community, you have a community currency, you know who your community members are. Now the question is, what does your community want to do? Because it opens up a plethora of avenues, particularly in the sense of business development, business opportunities, how you tap into opportunity zones, additional funding from state and local resources, because you have a couple thousand people and they want to do X. What is that X factor of Moxie? I love it. I love it.
Yeah, well, I mean, one of the X factors is, so because we're a closed banking system, we are basically the bank, the record keeper of all the transactions. We can allow members to go negative. So it's actually an interest-free line of credit. So because if one member is negative, that means someone else is positive. If you added up all 4,500 members, the number would be zero, all the accounts. So based on that, the Moxie dollars being backed by the full faith and credit of all the members, almost like a mutual situation, then we are able to make decisions within the network on allowing people to have interest-free lines of credit, which of course is very useful in the small business world oftentimes.
Absolutely. We're gonna have to have my buddy George Pullen, he's an economist, come and chit chat with you, because this sounds like sound money to me, but I don't want to offend any of the economists out there, because it proves another big point. Or I tell people, your business is your business. Blockchain is a tool that your business may use if it's appropriate for your business. So in this instance, Moxie's business is being a digital currency. Blockchain was not the tool that it needed to use to make that happen, so it didn't use it. Right. And so I want the world. Please expound upon that if you care to.
Yeah, sure. So, and I find it's kind of an age cutoff, really. If you talk to somebody over 40 and you say digital community currency, they say, "Oh, that's like a crypto thing, right?" So they just don't get it. You have to use the term barter, and then people over 40 are understand that better. If it's under 40, you can say digital community currency, and they don't automatically assume that it's cryptocurrency. They know that the difference between a blockchain and off the blockchain. But yeah, so. Um, we are the record keeper. There might be some type of future use that we could validate our currency through blockchain, but it's not necessary for the operations of our business. So, and actually, there's some still, unfortunately, negative connotations in the banking world and Bank Secrecy Act that some banks, if you were associated with a cryptocurrency, still don't want your business. Maybe if you have $5 million in the bank, they'll take you. But if you have $50,000 in the bank, they say, get rid of that guy. We don't need any crypto Bank Secrecy Act problems. So
I love it. I love it. I love it. Yes. Always remember KYC, AML, and of course the Bank Secrecy Act if you're ever involved in any of the conversations around currency or money. I have a lot of technical questions about money transfer licenses, et cetera, but we'll skip those for another time. So as we're wrapping up here, because we like to keep our interviews pretty quick, I forgot to ask you the most important question. Or actually, it's not the most important question. How much did Moxie raise in total?
660,000.
Excellent, excellent. I love it because I tell people, even though you can raise 5 million, most businesses they really only need to raise around $263,000. So that was our figure from last year. You raised a little bit more than that, approximately 2.5 times more than that, and that's great because it helps build your business. You got to get those software updated so you can move, so you can grow from a regional currency to a national currency. And at the end of the day, for me, crowdfunding is about how do you impact Main Street businesses, and particularly when you have a community-based currency where you're enabling one business to barter or transact with another business, that definitely hits down home, straight down Main Street for me.
Yeah, for sure. And we'll probably do another raise. You create awareness with each raise, I think, and you'll see many companies that don't even pause really. They just go almost directly into another raise, either on the same portal or on a different one. But we would like to raise some more marketing money also to expand. So it's likely that I'm pushing for before the end of the year to have another raise. One thing we didn't talk about, which I think is really, and which I brought up to you on that post, was I really think that the number of companies raising is expanding beyond the number of new investors who are coming onto the portals, and also I don't think that many investors are doing their due diligence and having some process by determining whether it's a good investment and the valuation is reasonable or not. And so a lot of people are going to not make any money, which is normal in this type of investing, but they're not expecting not to make any money. And so some people, they got 10 investments, they put $500 in each one or whatever, which is maybe a good diversification. But when all $5,000 is gone in 2 years, or it has done nothing, those people are probably not going to invest more anytime soon. So it'll be interesting to see what happens, but I do think that we'll see a boom and then a kind of a decline, and then a final output. Mm-hmm. If you remember, I brought up the World Series of Poker on that analogy to you.
Yeah, just remember, don't send John Roberts or Moxie any funds. Their round is closed. If in the future they open it up, they will let you know he's not soliciting any funds from anyone at the moment. It's just for education and informational purposes. Because we always want to stay on the right side of the regulator.
Thank you.
Yeah. But going back to what you were talking about, what are your top 3 investor tips, particularly when we were talking about due diligence? What are your top 3 investor tips? Or the top 3 things founders need to just be transparent and ready to explain to investors?
Yeah, well, that's a good question. I mean, I think that the primary thing is as an investor, you have to come up with some type of method that you're going to use across all various company offerings as to how to establish a proper valuation. And so there's different methods. David Burkus, is a famous angel investor, and he has a pretty simple method, 5 criteria. Each one's worth 300,000, and you give a score. and you come up with a maximum of, $2.5, $3 million as the valuation. If you're consistently using that same valuation and you just keep track of what you're doing each time you do that with a company, you're going to start seeing some patterns, and you're going to be able to establish your own criteria that what's important to you and what works for you. And as I mentioned in the beginning, I think the management team is very important, that they have some experience in the industry and hopefully even prior success within the industry that their company is attacking. So those are the things I look for. And I think founders have to be able to explain their valuation. I mean, under reasonable terms, before they go live, they should ask friends and family to question them about the listing and the valuation and be able to explain it.
So this is Samson Williams here for the Crowdfunding Professional Association. We're wrapping up a great conversation with John Roberts, the lead investor into Moxie, who raised $600,000 on, was it 600,000 or 650,000?
660, I think, was the final number.
Who raised 660 on WeFunder recently. And so I want to clarify some things. John isn't actually an employee of Moxie. Is that correct, John?
Yeah, well, I do operate the New Orleans market as like, I'm not an employee though or anything now.
Yeah, so this is what happens when you have investors. They're customers, they become investors, and all of a sudden they're operating one of your markets for you.
Right.
And so this is where there's some synergies there. There's some incentives there. Whenever you have a business and your customers also have skin in the game, an equity stake, then all of a sudden they're super incentivized. John was like, don't worry, I've got all of New Orleans for you, Moxie. Because the alignment of goals is so much more there than just, some random VC who lives in New York and is not visiting New Orleans anytime soon.
Yeah, great point.
Yeah, I just wanted to bring that out because I try to tell people that the number one reason that you crowdfund is to onboard customers. That's it. Then there's 5 other reasons, and the 6th reason is to raise money. And so some people don't realize that if you already have a good product or service, as you said, you're looking for companies that have good product or service because they're generating some type of revenue or sales. You're actually doing a marketing and advertising campaign for your good product and service. And then after you've marketed and advertised your good product or service, recruited some new customers, retained some lifelong customers. I think you said you had 4,500 members of the Moxie community.
That's correct.
And once you recruited your small army of 4,500 free marketing advertising folks, then you're like, oh, we're actually going to raise money. So investment capital. So just keep that in mind if you're thinking about pursuing a crowdfunding campaign or launching your own crowdfunding campaign. It's not just to raise investment capital. It's to onboard lead investors like John onto your cap table, give them some Moxie or give them your business pom-poms and set them loose to their community to help grow your business. So John, as we wrap up, I want to give you the last 60 seconds. What's the one thing you want either founders or investors to know about crowdfunding? Go.
I think research is the number one thing. And I have to commend you, Samson, for the Crowdfunding Professional Association. You're doing great work. Go to different platforms, go to Bright, go to WeFunder, go to Seed Invest. Honeycomb is an interesting one with, basically lending money instead of, so do your research, visit a lot of different sites, read a lot, do that, come up with your own methods of how you want to make determinations and be consistently using them. And you'll have more success than if you just randomly go to only one site and pick up something that looks good for the day.
Absolutely. Absolutely. So as of June 2021, there's over 60 FINRA approved crowdfunding platforms. I want to say there's 65, but it gets updated almost daily. There's another 24 in the hopper. So you have a lot of options of which crowdfunding business is right for your platform. Which platform is right for your business to go crowdfund. So just keep that in mind. Shop around. If you're a founder, shop around, check out the different platforms. If you're an investor, again, you might want to take your businesses you've invested in as an angel and say, hey, let's crowdfund our next raise, again, to get those customers on board, get those investors on board. And so just keep that in mind. As John Robert says, always do your due diligence. John, thank you for joining us here at the Crowdfunding Professional Association. We really appreciate you taking out the time to drop some of your knowledge on our community.
Oh, I enjoyed it, Samson. Thanks for having me.
Awesome.